Welcome back to Teshkid FX for another quant price prediction update, and in this video I'll be giving you the latest developments here on the quant chart. And at the time of this recording, quant has managed to break above a key area of resistance. And before I kickstart the video, make sure that you give this video a thumbs up, subscribe to the channel, and also consider checking out the channel membership. And also allow me to kickstart the video here on the 4-hour chart by first giving you a recap of what has been happening, where you can see that quant, after making it to an all-time high, we started the bear market, where we have been seeing lower prices in this ABC corrective structure, which has now taken us back to around the $40.1 mark. And after seeing that bear market low, we started a very nice bounce to the upside, obeying the Elliot wave structures, where we have that first wave to the upside, then a wave 2, a wave 3, then a wave 4, and then a wave 5, making its peak at around the $229 mark, and also completing the formation of that higher Elliot wave count 1 to the upside. And whatever we expected next after seeing the formation of a higher Elliot wave count 1 is the formation of a higher Elliot wave count 2, which is a corrective wave. And because of its corrective nature, we are also expecting to see an ABC corrective structure. And once you see the low for this higher Elliot wave count 2, then we can expect another bounce to the upside in the formation of that higher Elliot wave count 3. And that is what I'm expecting to play out on the long-term scenarios. But getting back to the short-term scenarios, we can first get to see sketch out a minimum target area to the lower side in the formation of this second wave, using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, and that gives me a minimum retracement area in the formation of a second wave between the fib level 0.5 and the fib level 0.618. But upon losing the fib level 0.618, I had to extend my target area back to the fib level 0.78, and now my target area lies between the $136.1 mark and the $81.4 mark. And within this target area, this is where I'm expecting to see the low for that higher Elliot wave count 2. Then from there we can expect this bounce to the upside in the formation of a higher Elliot wave count 3. And in the formation of that ABC corrective structure, which we expect in the formation of a higher Elliot wave count 2, which we are seeing right here, having the wave C giving us a low at around the $94.4 mark, we expected to see a 5-wave structure in formation within the wave C, which is an impulsive wave. And that's the reason as to why I'm saying I was expecting to see a 5-wave structure in formation within the wave C. And we are seeing such a structure, having this as the first wave to the lower side. Then we have seen the wave 2, then a wave 3, then a wave 4, making its peak at around the $133.8 mark. And I'm expecting one more new low in the formation of this wave 5 to fully maximize the formation of that wave C, and also fully maximize the formation of that higher Elliot wave count 2 to the lower side, and sketching out a minimum target area to the lower side in the formation of that wave 5 by connecting the trend based Fibonacci from the high of that first wave to the low of the wave 1, then dragging the fibs to the low of that wave 3. That gives me a minimum target area at the fib level 1.618, that is the fib level 0.618, and that perfectly lies at around the $71 mark. And that is the minimum that I would expect that wave 5 to the lower side to do, and that is where I'm expecting to see the low for that higher Elliot wave count 2 to the lower side. And that means I'm expecting one more new low here on the quant chart for us to fully maximize the formation of a second wave. And because we're in the formation of a wave 5 to the lower side of this Elliot wave structure in red, we also expect to see fractal waves in formation within this wave 5, because a wave 5 is also an impulsive wave. And we are seeing such a structure right here, having this as the first wave to the lower side, then this is the wave 2, then I'm expecting one more leg down in the formation of this wave 3 before we see a wave 4, and then continue pushing even low in the formation of that wave 5 to the lower side. And now that you have managed to break above a key area of resistance at around the $110 mark, there are chances that whatever we are seeing right here might be a lower Elliot wave degree in formation within this higher Elliot wave count 3, where we can term this as a wave 1, then a wave 2, then I'm expecting another new low in the formation of that wave 3, then a wave 4, and then a wave 5 to fully maximize the formation of this wave 3 of that Elliot wave structure, which is a fractal wave within the formation of that higher Elliot wave count 5 to the lower side. And there are chances that now that you have managed to break above a key area of resistance, and we had a high at around the $115.7 mark as the high for that second wave, there are chances that we might see a retest which is not a success, for us to fully maximize the formation of this wave 3 before we see a wave 4, and then continue pushing even low in the formation of that wave 5 to the lower side. And that is what I'm expecting here on the quant chart on the short-term scenarios. And also taking a look at the indicator indicators. Here on the RSI we are trading at around the 57 mark, meaning we have massive room for us to support any movements to the lower side and also to the upper side. Also taking a look at the MACD, on the MACD we have printed a bearish cross, and that would mean our prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.